Good morning, everybody. This is Kula Dula from RawStocks. We got another edition of our pre-market prep. Hope everybody had a great weekend. We had a stellar, rip into the weekend. But now what? We're starting to see a little bit of profit taking in the data. We're going to cover all that. What does that mean? What's the forecast? What's going on? We're going to cover it all. Stay with us. Quick shout out to our sponsors, Black Box Stocks and GammaEdge. Without those guys, we would not be able to provide this to you every single day for free. So big shout out to those guys. So make sure you support them. You can get access to the same type of tools that I use to determine and read into the market with the links in my bio. All right, so Friday we saw an extension off our daily 4 here. We always talk about the daily 4 for distribution. We saw an extension off of that. So what does that normally mean? Does that normally mean that we see a little consolidation before we see another extension? Does it just mean we keep going? To me, what we're seeing today is exhibiting potentially the consolidation look more so than the more of a distribution. Okay. And I'm going to show you why. The SPX today, we're going to cover a couple things real quick. Before we do that, it's Monday. I forgot. Tons of Feds talking today. I mean, you don't normally get this type of Fed talking, okay? I think this is deliberate. I think there's going to be some volatility today because of this. But I think you need to be monitoring this here, okay? We are covering the current account, which is not anything substantial, but we're on Tuesday. It's something to be looking at. We're going to get PMI at 8:45 tomorrow. We're also going to get the Richmond Manufacturing Index, which is a good indicator on kind of how they're seeing the quarter going. And then JP talks again on Tuesday at 11:35. And a lot of people are having like crazy things about him just kind of talking here. This is a scheduled event for the month. So this isn't like something that just popped up. This is a scheduled event here that he's going to be talking on. But I do expect some level of volatility from that. So we have a couple different things today. We have a ton of Fed speaking tomorrow. We have a few things that can ping pong us. New home sales into Wednesday. GDP. This is the final GDP to the quarter. Okay, so all the other ones are preliminary, can be inflated, whatever. This is our final GDP print. Okay, this comes on Thursday. So, man, I really don't like this view. Let's go. Okay, line here. We had this was in June. This was the actual print of a point -1.5, or excuse me, the point -5% here on the quarter. It's the first retracting. So if we get another print that is virtually negative here, which would be kind of interesting considering that the preliminaries were not, then this would be a recession. Okay. That's virtually what that means. And we've had a print like this back in 2022, right? If you go back and look, the June and September, that one of those was a revision, and we had 2 of those, and that's technically grounds for recession. That's what would be called a recession. 2 negative quarters of decline. And as of right now, we're just in the 1. We have negative 0.5% here. So it's something to be monitoring, right? That comes in, kind of see how that responded back in 2022. But that is something that you definitely need to be watching. That will drive virtually everything for us. And Friday we have PCE, but I don't think any of the PCE matters anymore. I think it is GDP. I think it is jobs. Those are the only things really that are going to drive us right now. I don't think jobs. I think jobs are a big deal, and I think that personal spending is something that you need to watch as well. So we have VIX climbing this morning. I think this is okay. So my bad. It is climbing for the day, holding 16 as we see this potentially expand out towards 18. That is something that we're watching. If we lose 16, then game over. We see this thing start to flush and maybe run higher. But 16 was our area of, let's add this real quick, and I can be a little bit more, as I haven't checked it. Let's see where we're at. So 16 was our positive. It still is our positive. Run us into 17. I said 18, 17 now. So watch 16 here. If we start to see like a dip, but we start to see VIX start to get below 16 here, it is something where you could possibly see us start to rip. But anything right here, we're in volatility zone today. So heightened volatility, premiums will be a little bit higher because of this inflated VIX. You need to be very cautious of the day. Looking at the price action from Friday, you can see strong squeeze into the end of the day. We talked about a 66.70 squeeze at the end of the day. We were in calls from, I think right here. I think it was right here. We got into a call and we said, we exited, I think right here. And we said, you know, this was already like 100% gain. We said that this thing could go all the way up to 66.70, and it sure did. Sure did. So something to be monitoring there. But as it looks right now, we're sitting at 66.44. Okay. So this is our pre-built range based on where we're at. We're down here. Okay. So this is why VIX is heightened. Because as of right now, we're below our expected range. So what does that mean? That means that we could have some type of volatility event where we start to sell down. I think it's, you need to take note that the overnight low was at 66.36 on the SPX. 66.36 on the SPX was our overnight low. So will we open right around this 66.44 and drive us down towards that 66.36? It's a potential, has potential. We could keep going below that. I think it's something that we need to look at. That SPY also has a different look to it. Okay, so SPY has us virtually down here at 660. I must have read this wrong. 662 right here, our negative gamma shelf. So as it pushes down in towards 660, that is where it's getting bought up. So that is going to be Friday's low, that it's getting bought up at that point. So if we break below that, of course, there's volatility to be expected. But as of right now, we're kind of in that like limbo zone. Okay. And if I had to say anything in regards to where this is going, I have to lean more towards, bullish, right? So it's when we're down in this range, we have to look at it as bullish. But I do think it is important to talk about profit taking. You can see, and I know it's substantial here, but you can start to see that some of this net delta has actually fallen off. We're starting to see some profit taking below. And this is where buying the dip does not become buying the dip so much anymore. When you start to see the profits, I tweeted about this last week actually, and we're starting to see some of that net delta shrink, and that is people taking the profits, moving on. But as of right now, there's still a tremendous amount. Don't get me wrong, there's still a tremendous amount of bullishness here, but we're starting to see that first little sign that maybe the buy the dip crew is looking to not be the buy the dip crew. Okay, the first signs of that. We still remain call dominated, a strong positive net GEX here. You know, market makers like to stay balanced, but we're leaning bullish here. And we're seeing 6,700 on the full complex now. Remember, we saw 6650 as the upside target. Well, now that's gone and it's moved to 6,700. So the full complex to the upside move would be 6,700. That was our next key level. All right. Our next key level is 6,700 to the upside. Today, you can see 6675. There's a bit of an overhead short, nothing substantial here. This is probably more so just people selling covered calls into that. And we're seeing a really just kind of a bullish look here. Not anything to mess around with. There's still 337,000 contracts open. So this is something where you can see that there's still a lot of bullishness into this. But as of right now, we're opening up towards the low side, if not below our expected range here. I think that you need to take into consideration the S&P ETF here, which is SPY, has flipped to put dominated. You can see that a tremendous amount of the net delta have fallen off of the SPY zone. It becomes more speculation to the upside, but the net delta has significantly dropped. And we're starting to see some of that, those targets, that speculation outweigh the upside speculation on SPY. Now, when we start to see that flip on the S&P, that's where we really start to say, okay, this can happen. This is a lot of this is retail, right? And you know, not only just retail. I mean, people, market makers use this. I mean, there's a tremendous amount of people that use the SPY ETF here, but it is something that you need to monitor and know that this is some profit taking being had, and people are starting to get into hedges. And that is where we start to see some of those downside moves start to move with acceleration to the downside. Okay. So it is something you need to monitor. You can see that today is put dominated, more so a slippery slide than overhead pressure. So what that means is as we break down, it gets faster and faster and more pressure gets put on it. But as of right now, not a tremendous amount of overhead pressure. There is some, but not a tremendous amount. And I think it's something that you'll likely see some chop today. And if we do break below our zones, I think we could really turn into some type of slippery slide today. I think you need to know that, you know, virtually our daily 4, we use this as a trend dictator, right? We always talk about this. This is the daily 4, and it rises with us pretty quickly. So we're probably more so, you know, if I had to guess, we're probably in that, right in this range, this 66.40, right where we're opening. So it's very curious to see kind of how that runs when we open. But there's going to be a lot of support there. We could see some chop there. But if we do see a breakout outside that, that's something you need to consider. Currently, we're probably a little bit outside. I mean, we said 16%, so it's about 1% either way. That puts us up towards 65, or excuse me, why does it say that? 67.20. That's weird. It's incorrectly stating that. That's weird. And then we're coming down towards, maybe it's just, I don't know. Anyways, 1% to the downside. I guess I never pay attention to that. To the downside is 6,600. But like I said, the daily 4 is something we use for distribution. You could see a strong level of support when it comes into that daily 4. For distribution, it'll be lying somewhere probably in that 66.48 zone, right around where our low is for the GEX profile. That puts us virtually, as you can see, it puts us into the full body of Friday's candle. When we break below Friday's candle, that's where people are starting to look, but our overnight low is down into the wick. So nothing super crazy. You know, this is more so buy the dip down in towards this wick. And then you would look for this thing to try to push up towards our upper body and maybe potentially get the expansion up towards 6,700. But I do think it is important to understand that some of that buy the dip mentality is shrinking. Okay. People are taking profits. People are starting to think that we're extended. Yeah, so let's move on to NVIDIA here. Let me pull up the data for NVIDIA. And just to be clear, that could be hedges, you know, rolling into the GDP print. I think that's important to know as well, or state, let's put that way. All right, so currently We're sitting at that 176 zone. 180 remains the biggest call wall you've ever seen, right? 180 remains there. Still a ton of bullish support under here. You can see the net delta. There's some gamma exposure to the downside, sure, but a tremendous amount of net delta here that is still remains very positive. For the week, we see and call dominated gamma conditions, 180, 165 and 180, 165 demand, 180 supply. You can see this split virtually happens at that 175, 172 and a half area. And we'll see if this wants to be bought up into, say, that 165 zone and sold on towards that 180. 180 remains full complex barrier wall here, but when you look at the week, of course, it goes above that. These people will likely get burned unless we have some type of breakout, which is unlikely based on what we're seeing. Okay. NVDA remains in that chop zone. Let's pull this back up. We bought the dip down to this range here. Held a, let's put it this way, held a hedge too long on this, and it had a couple opportunities here to exit on that hedge and ultimately stole our profits on Friday. But we did, virtually, I would say about break even on that position based on what we did with the calls selling it into Thursday instead of waiting for Friday, which was ultimately the best idea for us. So as it stands right now, 175 support on NVIDIA would give us a green light to buy. I would watch for that 177.5 area to 178, this same volume zone here, right? We visited twice on Friday and got sold on both times. Currently, we're looking to probably swipe all these lows here, and we'll see if this thing wants to turn into something where we come and bounce off of 175 and try to get legs. If we lose 175, I think this could be bad for the market, okay, because we're kind of at that pivot point. If we start to see NVIDIA lose 175, 173 to 172 and a half is likely going to be your target to the downside for a retest to 175. It could get expansion towards 180, but I really feel more so if we do get this breakdown below 175. I think I'm looking for this thing to revisit down towards these lows again. I got caught and burned because I was waiting for this low to get swiped where this alert is at 166.79, and we never got it. But I do think that it's meant to happen. And I do think that that is likely. So if 175 does get lost and it looks pretty substantial, like we're getting into some selling on any type of 175 retest, I might open a lotto for a 165 visit. But right now it remains bullish over the top 175 and in 172. That is your virtually below 172 is your cut zone for this to revisit into 170, but more chance than likely it'll come down to 165, which is our demand area on the GEX profile. Tesla, I know a lot of people were super stoked about Elon and Trump getting together over the weekend for Charlie Kirk's little, or not little, massive celebration of his life and memorial service. And yeah, I mean, that was just some type of overnight speculation. I don't think there's anything to be said about that. Neither one of them made it very much like, hey, this is full amends. This is just, I think it was just coming together for Charlie type of deal. I don't think you come back from what Elon said with Donald Trump. I don't think you'd get back in the Donald Trump circle like that. Maybe I'm wrong, but I don't think that's going to be the case. 435 to the upside, 400 to the downside on Tesla. Full complex here looks very much bullish, with 500 being the upside speculation target, okay? But 450 is going to be your first target here. That would be where we'd see a breakout over 435 would probably bring us directly to that 450. And at that point, it would make a decision on whether we're going to see a full-blown breakout from that or that was going to be another one of those, probably gap up and then sell down type of events here. So we're watching Tesla here as we stand. Bullish support to 420. You're not really interested in buying into 435. You just not, based on, especially with the stuff we're seeing on the market, the overall market, the S&P, the win to the market. You're not interested in buying here. This top of our range here, right? We don't do that. If you do that, you keep you keep the trade ultra small, and you're looking for expansion moves. All right. This is where we look to get short. This is where we look to get long. And we play the gamma walls. Okay. All right. So that's going to cover it for today, guys. I'm running real late. I'm running right to the buzzer. Let's put it that way. 8:30 is rolling around. RawStocks, LLC.com. Make sure you subscribe and like and retweet and everything else. Appreciate you guys for tuning in. Until next time, we'll catch you later.